If I can just get everybody out there to look at things just a little differently, I'm telling you right now, you will be amazed at what you see. I've got goosebumps already because the IMF issued a whole bunch of SDRs. We're going to talk about that coming up. I'm Lynette Zang, Chief Market Analyst here at ITM Trading, and I am so grateful to be able to be here and show you what I'm going to show you today. Because is there a crisis at the IMF? Well, yes. And then I'm going to show you what I just saw. That's like basically blown me away. Frankly, it's all interconnected. These are not disjointed things. And one thing that we absolutely know is that whenever there's significant news that they don't play up, it's really significant, it's kind of underneath, you will see gold, primarily gold, drop dramatically and for no real apparent reason because they do not want you to fly to the safety of gold and silver physical. They don't want you to do it. They don't want you to protect yourself, but I do. So let me show you what I found. So the IMF has approved a historic $650 billion SDR allocation of special drawing rights. This is a historic decision, the largest SDR allocation in the history of the IMF, and it will benefit all members. So it is a general allocation to all of their members, which is pretty much everybody on the planet, 189 members. All of their members at the IMF are Treasury secretaries and central bank heads. Now, the SDR is the currency of the International Monetary Fund, the IMF. It is a basket of currencies that are composed of 5 different currencies: the US dollar, the euro dollar, the Chinese yuan, British pound, and I don't know, something else. They can expand that basket to include all the currencies that they want. It was created in 1969 to take over as the world reserve currency from the US dollar. But then Kissinger went to Saudi Arabia, they created the petrodollar, and so the SDR went to sleep. And all the mechanisms that they created to make this transfer happen went to sleep. In 2008, of course, we had the financial crisis. China, they came out and said, well, what about the SDR? And I thought, well, that's absolutely right. They tested all of these mechanisms to see if they would work. Yes, there is a crisis, but it's much bigger than that. I mean, why do you care? Right? Well, I'm telling you right now, you really need to care about this because it has impact on your very life, your standard of living and everything. You should care because right now, the US dollar is still classified as the world reserve currency, which up until like 99, basically, if you were a government, a corporation, and this is certainly still true if you're an individual, going outside of your borders and buying anything, lumber, steel, oil, medicine, whatever it is you want to buy, you had to use US dollars to do so. So the world is flooded and awash with US dollars. Well, when we convert to the SDR, guess what? A lot of those dollars are coming back home. So did they try and create some mechanism? Sure, they have the substitution fund. If you own a US dollar denominated bond or dollars or whatever, you can deposit it into the substitution fund, and then the IMF, well, they'll convert them into SDR denominated fiat assets, and then they can determine the timing of when that comes back to the US, to the final destruction of whatever itty bitty bit of purchasing power yet might remain in the US dollar at that point. You need to care about this because this is going to impact your life, your children's life, your children's children's life, and so on and so forth. And if you are not in the right position as we go through this, it's a big club and you and I are not invited. But let's create our own club. How about we do that? What I'm going to show you is the global supply of reserve assets. Now, this is the reason that they give for this huge allocation and distribution of brand new SDRs that are created with a button push. This is G7, so the top 7 economies, the government debt as a percentage of GDP, which is 140% and continuing to grow. We're going to raise the debt ceiling. I mean, this happens every time. Either they're going to suspend it or they're going to raise it. And also major central banks' balance sheet as a percentage of GDP. And we're talking global here. The real problem is that there comes a point where debt is not just unsustainable, but actually has the reverse impact. And we are there. That's why all of this new money creation, all this new debt creation that has been happening, particularly since 2008, has not been effective in really growing the real economy. There's been a small number of people that have benefited compared to the many. Now, this is what they did when they were testing out the system. Here is a little test here, and there's the big test, so you can kind of get an idea of the size. This was as the crisis was unfolding. In March of 2009, that's when that started, where the SDRs came out. So you can see that this dwarfs what they did in 2009, and that was in the middle of a crisis scenario. US 650 billion general SDR allocation, so they just push a button, create it, and then give it to everybody, would help meet a long-term global need for reserve assets. 140% of GDP, I mean, just keep printing that money, just keep taking on that debt. Are we in crisis? 100% we're in crisis. There's not one doubt about it. Their actions tell me they are trying to battle this huge crisis. What they have done, all of their experiments are not working. But what I also see here, especially when they're talking about the long-term global need for reserve assets, I see the positioning of the SDR as the world reserve currency. Because since it's a basket of currencies, there are no limitations to how many currencies they can put in that basket. I mean, it really does make sense to be a global currency that can be converted into the local currency. So US dollars or euros or yen or what have you. It'll go in as a reserve asset, building their position, getting into position after all these years, since 1969, people, to be the world reserve currency. And then you have the IMF, and they've done so much work on holding title to your property, to your real property and any equity that you own in digital coins. And then this will be completely under the control of the International Monetary Fund, which again, it's every Treasury Secretary, it's every central bank chief. They are all unelected officials. It's not expected to generate any global inflationary pressures. But QE doesn't create any inflationary pressures because we know everything's a whole lot more expensive than it was in 2008. I think that this is about two things. Number one, when they give them SDRs, what they're like is like ice cubes in a glass of water. So the US dollar has reserves. Now they have SDRs in reserve, and it makes the glass look more full. It doesn't really make it more full because, again, these are created from nothing. Things are heating up. You see this special allocation that makes what they did in 2009 look like chump change. I mean, it makes it look like there's definitely a crisis happening, that they are reflating. People ask me all the time about deflation. That's what they're fighting with all this money printing. And there's only one way to do it, and that's with inflation. And I got to tell you, this will 100% send us into a hyperinflationary depression. There is no other way. When they tried to do it before, it was a big fat fail. So it's garbage. It's just something for them to talk about. I'm telling you, I'm freaked out. This is happening so rapidly. They need more reserve assets. Central banks are not creating enough. 2007, the major central bank balance sheets were 4.9 trillion. Now they're 30.3 trillion. Did it actually stimulate the economy? No. This is where the Fed attempted to raise rates and run off their balance sheet. And run off their balance sheet didn't mean to stop buying, but they were reinvesting dividends and principal. So that's all they were doing, was not reinvesting that amount of money. And what happened? Well, September 2019, when the plumbing of the global economy froze. It froze. And you can see it right here. That's what they did after the freeze, and then 2020. The timing of everything is kind of, I don't know, coincidental or convenient. You've got the federal debt over 28 trillion. You've got in the US all sector debt over 84 trillion. You've got the bank balance sheets over 30 trillion. I see the positioning. I see what's happening. It's driving me crazy. Whether you realize it's major or not, they know what they're doing. They have a plan. I hope you do too, because they have a plan. Let's just look at the value of bar and coin demand in the first half. H1 is the first half of the year, so January to June. Highest since 2013. 2013, there was an awful lot of confidence that was lost. People saw who was chosen as too big to fail, and it wasn't us little guys. And nobody went to jail because those contracts are written in such a way that what they did, disgusting, despicable, evil, not illegal, which is what counts in a court of law, maybe. I mean, you know, let's face it, there are different rules. QE began in 2009. 2013, a taper tantrum created market volatility. So you see all of the accumulation in the public buying gold, because this is bar and coin demand. Well, people are uncomfortable again, and that's between January and June, first half. This should be higher than this, in my opinion. 2016, balance sheet runoff. They attempted to just run off that balance sheet and raise interest rates. Big fat fail. Couldn't do it, couldn't do it. Every single country that has attempted to raise their interest rates, reduce their balance sheet, every single one has had to reverse those positions because the markets have a temper tantrum. Who's really in control here? Honestly, it's not the government or the central banks. It's Wall Street. It's the markets. That's who's in control of all of this. You saw when it started, 2013. Wow, that's also when they changed how they did the accounting for the derivatives too. Coincidence? I don't think so. So things got calmer because they looked calmer, but they never stopped doing what they were doing. All right, we know March 2020, the global economy was shut down. What are the central banks doing? There's your 2013, and these are all reflective of H1, so the first half of every year in there. This is 2020. Okay, we know what was happening in 2020. I can look at a graph or a chart 100 times, and this happens to be one of those times when I took another look at it, and the first half of 2019. Why was there this huge spike above maybe even an all-time high? I think I kind of remember that being an all-time high, but that was the first half of 2019, not the second half as the crisis was unfolding. You think they might know something that you don't? You think they were getting into position because they saw this coming? Do you think the IMF is getting into position because they see the absolute destruction of the global economy and they want to be the currency for the world and control the world's currency and all the world's wealth? These unelected officials? You think they know something you and I don't? My daddy always said, do what I say and not what I do. I'm so grateful for those words. Because I look at what they say, everything's hunky-dory. We've got it covered. This isn't going to create inflation. Don't protect yourself. Let's do a big dumperooski on gold and silver so people think, oh no, it's going down. Are you kidding me? Historic level of IMF SDR creations. This debt bubble is bursting. So they keep pumping it up by creating more debt and the central bank's buying it. That's monetization of the debt. I don't care what name you give it, but there's your crossover between governments and central banks. Are they independent? I don't think so. And what happened in February? Price can be unrelated to silver in midnight prospectus change. Yeah, they did that really quietly too. So you can't pull together a basket of physical silver for SLV. Because the paper markets control the markets, while the central banks, while smart people that are paying attention are buying freaking physical silver and gold. I'm not selling my silver and gold into the market. Once it comes off the market, it's off the market. I'm holding it. Look at the spot silver. I think it was like 23 bucks. I mean, please. Honestly, it's a joke with the level of leverage that are in these markets that we don't even know about, quite honestly. Not one little doubt in my mind. This indicates that the wheels are coming off the bus in a big way and they're trying to get ahead of it. But the central banks, you hear these people, well, they'll just raise the rates. We have the tools, we'll just raise the rates. Because when you have enough ramp room to lower rates, 5.5%, 5.75%, which is what they did into every crisis. Well, what? Lower rates inspires borrowing and spending. Raising the rates reduces borrowing and spending. They can't raise these rates. There is too much debt on the books and they are anchored at zero. When they talk about the Fed getting behind the 8 ball, it's garbage. He's not behind the 8 ball. He's between a rock and a hard place that is getting more and more and more and more narrow. They can't do it. They've used up all their tools. All they have are interest rates and debt levels and growing more debt and creating more dollars, which devalues every single dollar that's out there. So those that have the wherewithal and that the 1%, they own a whole bunch of stocks and it pushes the stocks up. So they think that balances out. Yeah, tell them that in Zimbabwe. Tell them that in Venezuela. Tell them that in all other countries that have experienced hyperinflation. Tell them that in 1929, for God's sakes, in the US. Every single area of the global economy uses physical gold and silver, not spot gold or silver. This is what that looked like overnight. Now, this guy has been a trader since 1975. And he says, this has all the fingerprints of a bank brokerage house conducting forced liquidation upon a huge leverage speculator. Leverage is great on the way up, but it really stinks on the way down. The leverage in the futures market for the trading COMEX CME gold is about 15 to 1. My bet is a lot higher than that, and I know that it was at the biz when I looked at it. But thus, a leverage position can get into serious trouble with the type of decline experienced on Friday. So the jobs report came out a little bit better? Oh, okay. So that means that the central bank is going to raise the rates to fight the inflation? No, they won't. Mark my words on that. I'm putting my neck on the line. If they do raise them a little bit, they will be lowering them quickly thereafter. This market, the fiat market, is a house of cards. It is so vulnerable. So no, they're not going to raise the rates to fight inflation because they're creating this inflation. And it is not transitory. It is permanent. And I am now, after seeing this, where I was saying, we could have started in the hyperinflation, but I'm not really sure yet because I'm not seeing that movement in the velocity of money. After I saw the IMF move with all of those SDRs and I'm watching everything else that's going on with the central banks, I hate to say this, but I think we are ramping up for it to get really, really noticeable. If you don't have a plan in place, get one in place now. And, you know, it's an awful lot to do. Food, water, energy, security, barterability, wealth preservation, community, and shelter. But how do you eat an elephant? One bite at a time. So no matter what you do, get that plan in place and then you execute it as you can. But you will be in a much, much, much better position if you do that than if you just go, well, it's too much. I can't do all of it. I know you can't do all of it. I've been working on it for a long time personally. I know you can't, but you can do something, and something is better than nothing. You need to protect yourself. This is coming down, people. Now you have Peter Buckvar, who says, the trade with gold and silver is pretty straightforward here, Buckvar said. If you believe the Fed will get ahead of the curve, or at least in line with it regards to inflation, then sell. If you think the Fed will crab walk their tightening, then this sell-off is a gift. I believe in the latter. And so do I. It'll be interesting to see what has happened to the price because we already know that availability is not so easy to come by. Again, goes off the market. I'm not selling mine. Because what you really have to understand is it doesn't matter how many dollars you have, it matters what you can do with them. It's that nominal confusion piece that has been what has enabled the average worker to work for less and less, even though nominally his paycheck has gone up. It's what it has enabled an almost invisible tax. Because who gets to use those new dollars first? The ones that are closest to the central bank. So corporations first, other banks, corporations, and then the government. Why is the government, the federal government, the state governments, the municipal governments, why are they paying more in interest than corporations? Think about that one. This is the purchasing power. Now, this goes, here's 37, right? Right here, 37. Now, it's fallen even more than that. It's on its way to zero. And what 37 means is it's 0.037 out of the original purchasing power of the dollar. It's gone down. This is really the fastest that I've been watching this go down, and this is through June. You could be a starving billionaire. You can have billions of dollars. But if it costs you $1 billion to buy one egg, it doesn't work very well. And 1 trillion times zero is zero, so do not be fooled. If you can only convert what you have into those currencies, and they're valued in that currency, and they have a narrow base of buyer only used in 1 or 2 places, then you are not going to be happy. I have to say this. It is true. The system has been set up to support the debtors. So leverage on the way up is awesome. You can really look really, really rich. But on the way down, it is painful. It can wipe you out. Do you have a mortgage on your house? Great. I have a mortgage on my house. Great. But I also have the gold to give me the ability to pay that off like that. You have to be prepared for everything. If you have not studied currency life cycles, you wouldn't know all of this. And there are many people that do not think that we are going into hyperinflation. You tell me how we can avoid it. If all they can do is grow more debt, can you sit there and tell me that if you continue to just grow debt, never pay it off, not even pay all the interest on it, can you do that forever? Particularly when your income does not keep pace with the level of debt that you're growing? The answer would be no. And what if you lose some of your income? Guess what? You are a debt slave. And you will have to do whatever it is that the powers that be tell you to do. I don't want that for anybody. How many times can you be lied to when you do not know the truth? I'm trying to show you the truth. I know it's complicated, but you know what too? We have a whole team of really smart and talented people that can walk you through this maybe more slowly or on an individual basis, be able to figure out how to explain it to you so that you can understand it. Because this stuff is intentionally made complex so that you don't even try. But you can't afford not to try. And you can't afford not to see what I'm trying to show you, because things are speeding up. I feel like I'm on a flippin' freight train. So yeah, clearly what happened at the IMF freaked me out. And of course, shocker that gold and silver dumped? Heck no, not a shocker. They just positioned the next world reserve currency. They just flooded a tremendous amount of more money on top of what they've already done. We won't worry about the questions today, but if you have any, send them in or call the consultants and talk to them about this, okay? Please, please, please make sure that you understand what I'm trying to show you. I'm freaked out. I don't know how else to say it. I mean, everybody around here knows I'm freaked out. This is happening really, really fast, so you just need to really get into proper position. If you have not already subscribed, please do so. Please do yourself a favor. Hit those bell notifications so you know when we go live. Leave us a comment, give us a thumbs up, and share this video with anybody and everybody that you actually care about. Here at ITM Trading, we use gold and we use silver because it's real money that is the broadest base of buyer, the broadest base of utility. It survives what we're going through. History has proven it over and over 4,800 times. So until next we meet, please, please be safe out there. Bye-bye.